Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
This is the effect right now, is that you have Mag 7 stocks that are down considerably, and that's the concentration risk unwind that I spoke about early and often. And then you also have the yen carry trade, basis trade unwinds, which are part and parcel, but they're not the reason. Money going home is the reason. And so here you get, a few fabulous shorts, fabulous shorts, but they're also, they're not stable yet, right? So we're still kind of waiting for that stabilization. In the meantime, folks are kind of freaking out about rates of return, but we're almost at the end of April. Not quite. But if we end where we are, we've never had a 4-month drawdown of this intensity ever. The bears are prognosticating and the bulls are trying to look for something bullish. But the gist of the matter is that we have a very, very different market backdrop for sure, where gold is also hot fire flames, 25% above its 200-day moving average. Not usual, but it has been there before. And I have a particular chart that I wanted to kind of update you on. This is a gold stock ratio. So you remember when I had this little bugger, I said, okay, there's your left shoulder, there's your right shoulder. Oop, that's really messy. There's your left shoulder head, right shoulder. And we need to get back in play here. And sure enough, it retested and then it took off. But this is obviously gold is outperforming the S&P. Pretty obvious. And you can also see where it topped out back in kind of 2011, 2012. Stocks took over. You can also see where it got oil industry recession 2014, 2016, but it was really gold actually stopped going down in this area, but stocks really started outperforming. So remember, this is a ratio. Anyway, long story short, we got back up here in 2020 and you know what happened, liquidity, monetary easing, all that. And stocks went hot fire flames. We had a little bump here with gold over stocks from the 2022 low. And then, of course, I've been tracking this ratio as I do every week, going, okay, when's it going to get going above here? And sure enough, it cleared. This was the key level. I don't know if you remember, this was very, very, very important. We had to get above the 0.5 in order to get to the 0.55 ratio, in order to get to the 0.65. And I told you, once we get up to this level, that is when I would expect some profit taking. But we are obviously extended and it still continues to move higher. Even this morning, what's leading? Gold, miners, etc. So this can still continue higher, but it would be very, very likely, just because this has been a great kind of tool of getting in and out at inflection points, just to keep that in mind. So we'll see what it does here, but that is a very big ramp right back into prior areas where gold has digested. And that's really all I wanted to say about that. Does it mean that SPY is going to catch a break and move higher? Ooh, we got so much work to do. As you know, on my intermarket, it's just everything is broken. Wicked, wicked, bad. Wicked bad. Gold, just be careful. Not only did it psychologically hit continuous contract 3,500, this is very clear. Gold has obviously outperformed stocks. We're right into a prior area of resistance. So just kind of keep that in mind as tag your it comes back in on gold. And gold keeps popping higher during futures and then does its little profit taking during the day. I like this chart that I've been waiting for. So this is patience. And I do like that chart. It is one way. I can throw some fibs on here, whatever. The appetite is not going to go away for this conversion, right? For recycling, I should say, instead of dollars into equities and treasuries and such, but into gold. But that is extremely extended. Last week, I kept saying you don't short all-time highs. You just don't do it. But now at least I have a reason where we could absolutely see profit taking. Like just last night, I made sure to wait until it hit here to let you know. So we are there. And usually when we have a little bit of gold pulling back, stocks catch their breath. They can both go down, by the way, one less fast. But the point is, I'm just looking for some inflection point that says, okay, it's time to protect now. So I think with GLD, we could really be there. Now, doesn't mean I don't think miners are going to do really well and outperform. There's a huge disconnect between the fundamentals and the underlying price. Still waiting for that to get back above 21.35. Been a painful wait. Newmont holding that 55. Gold miners are still the place that money has rotated. I'm just showing you some of the stronger charts. AEM, AGI, and Wheaton WPM are still best of the miners from their breakout last year, and now others are joining. Gold definitely extended relative to stocks. Miners still have a lot of juice on an individual level. Careful on the gold extended and GDX extended.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.